Uh-oh. Oh my god.
Good afternoon. My name is Kyla P. Barnes. I am your financial chef and coach. And I wanted to talk to you 1 minute before 2 p.m. Today's date is 9/26. Specifically, I wanted to talk to you today because today is a very red day in the market. I'm showing currently, let me get my keyboard. About 5 minutes ago, the market was down 300 points. At this current time, the market is down 400 points. Ah! Right? Super ugly, mega upsetting. There's not really any new news that would power the market down, but I can tell you that the market is picking and choosing which particular subjects that they're going to adhere to. The last PCE, the last PCI report, the last home report, the market continued to move up. So what that means is that the market is operating in a cycle in which you have a heavy number of sellers right now, less buyers. You may think you already know that, but in addition to that information, the market right now is acting highly irrational. So if we can remember the quote that I put in my book, as well as I quote often by John Maynard Keynes, it is that the markets can remain irrational longer than you can remain solvent. Keep that top of mind, because there may be a trade that you're like, I know that this should be going up, but instead it's going down. So just remember that if you have a trading objective, if you have a strategy, this is the time to stick to it. Other key points that I'll mention, let me move my keyboard, is that a lot of the basics I'm going to cover in this particular video are in my book. It's available on Amazon. It's called Pounds or Ounces, Your Financial Blueprint. This book allows for you to set up a strategy as well as follow some of the same things I'm following, that I'm using my own money to place trades with, either finding successes or even finding losses. That is Pounds or Ounces, Your Financial Blueprint. It's available on Amazon.com. The other thing I want to tell you about this book is that it's $25.99. If that's not something you want to spend towards your financial education, I get it. But get your financial education somewhere else. That's my disclaimer. All right, let's talk about the markets. So a few things that I wanted to just let you know is that there are many times in which the market is going to follow news that is out there that is negative or positive, downgrades, earnings events, war, calamity, unemployment, consumer confidence, crude going up too high comparative to the market. These are just a few that will produce either positive or negative returns in the market. But what I've been finding, and I took notes of this, so I'm going to make sure I get all this in this video. But right now the market is down 400 points. If you have been trading without a strategy, you could be up, but most investors are down at this current time. I have the S&P for the year is up 12.97%, but for the month it lost 4.86%. The NASDAQ I have for the year is up 24.9%, and these numbers are year to date, but so far this month it's lost 6%. The Dow I have is up 1.4% for the year, but this month it lost 3.36%. So if you have managed to eke out 5 or 6% in a down market, congratulations to you. If you have also been able to eke out 1% of a return in a down market, that's fantastic too. And this is only referring to this month because the averages are negative. Again, the S&P is down 4.86%, the NASDAQ is down 6%, and the Dow is down 3.36%. I feel like this is also a good time to weave in the fact that there are going to be times when you're trading and it's not making sense and you're not producing a return that you want to. It's okay to take a huge step back and consider if you should put fixed income in your portfolio. So What does that look like? I'm looking at a yield matrix right now, comparative to CNBC, Schwab.com, and Fidelity.com. Those are sites I frequent. I also use Market Edge as well, and Barron's and Briefing.com. So for this video, I'm going to be quoting things from the plethora of sites that I just named. And I use those because I find that the information is more reputable, as well as sometimes they are in conflict with each other, but it really comes down to what is my trading strategy. Am I looking to have the market go up, sideways? Am I looking for income? Am I looking to short? These are all questions that you have to ask yourself before you place your trade. You need to know your entry and your exit point. So fixed income. As I mentioned, the S&P, the Dow, and the NASDAQ are down so far for the month. But if you are investing in a short-term CD at this current time, you can get 4.5%. That is an APY. So to find what your rate would be, you would have to take the APY and divide it by 12. So I'm just going to do that for this video because the market is down and we may have some time on our hands. I'm going to bring up my calculator. So let's just say 5.45% divided by 12 months means that you'd make 0.4541%. If you were investing, let's just say $5,000, you can use your number that's more convenient for you, times 0.4546% is going to, and you have to move the decimal point 2 places over. So it's going to give you 22.73 cents. Now, you may be thinking to yourself, Kyla, I'm not going to be investing money so I can produce $22.73, which I do get. But if in the event that you do find that is your logic, you may be moving ahead of something that's going to cost you 120. So does this trade make sense? It is slow, but when I look over all the months and the decades that I've been trading, I would much rather take a day in which I gain $23 than lose $100, lose $1,000, lose $4,000. So that's just my mentality. As a disclaimer, which I also put in my book, I am not a person who was born with a silver spoon in my mouth. So everything I have received, it's because I ran for it. I grabbed for it. You know, I was saving the $10, the $20, the $40, the $50 because I didn't have anything. And then once I amassed a certain amount of savings, which for me, honestly, because I didn't come from much, was $500. So when I saved a certain amount of savings and I became more serious, more hip to saving my wages, to paying tithes and offering to the church, to being more charitable with the increase that I have received, as well as fine-tuning my trading. Even in my 401k when I was working, I found massive returns. Case in point, in the 2007-2008 year, I think at tops I only lost about $200. So far for the month, as I mentioned, all the averages, the lowest average is down 6%, which is the NASDAQ at this current time. For the month right now, I'm up 11%. So that just shows you that you can make money in a down market, which I'm going to cover during this video. Fixed income should be in your portfolio. It doesn't have to be a lot of it, but it does need to be in your portfolio. As well as you have to be aware of your own threshold when you need to walk away. There are going to be some trades that absolutely have so much potential in them. You know, you're waiting on that reversion for it to go from where it is negative back up to where it was in the limelight and it was glorious. And that's okay if you want to wait for it, but you got to be honest how long you want to wait for it. You know, that 23.21 I mentioned earlier in the video is a slow trend, okay? But 23.21, if you wanted to invest for the whole year, would produce $278.58. Again, is that a lot of money? No, it's not. But did you beat the Dow on the year? Yes, you would have. Did you make more than maybe your peers would have made that month? Maybe not so much. It just depends on what your trading strategy is. I am a person who is not going to quote many large numbers because honestly, for the amount of people who need financial knowledge and experience, low numbers are less intimidating. Low numbers also could be where you find yourself. And that's where I'm going to position most of the things I talk about in all my videos, as well as what I put in my book. And that book again is Pounds or Ounces, Your Financial Blueprint. Other things I'm seeing, sectors right now, consumer discretionary is up 39% on the year. That's fantastic, but it's not having a great day today. IT is up 34.50%, as well as consumer discretionary is up 12.9%. There's a correction there. And communications is up 39%. So I'm going to roll that back because all my videos are one take, one message. And I do apologize. I gave wrong information right there. The sectors that are up so far year to date are consumer discretionary, which is up 12.90%. Information technology is up 34.50%. And communications is up 39%. Okay. The sectors that are down so far in the year, utilities is down 10.44%. That's going to be your water utilities, your electric utilities, as well as your natural gas utility companies. Real estate is down 6.5%, and staples is down 5%. These are also the stocks today that are almost break even. Does that make sense? So on the year, the stocks that are typically higher right now are down. But the day in the market currently, where the Dow is down 392 points, the things that are down are up. It's a seesaw. It is a seesaw. The other thing that I've noticed is that when you go to chart the 11 sectors, you'll find that there's a period in which stocks either rebound or they drop a little lower. What I found in my research over the last 2-3 months was that July the 6th is when it appears as though stocks reached a recent low. And right now, if you were to pull up a chart on one of the ETFs like DIA or QQQ or even SPY, you'll find that around July the 6th, the stocks hit somewhat of a low. So that means that right now we're at a testing point. All the gains that we have received from the end of July, they're gone. The gains that we received from maybe July to August, those are also gone. But what you'll find is that the gains that you received from July 6th, probably before February the 1st, are still there. Do your own research. This is just what I'm finding in my research, and this is what powers me to do what I do. Okay. Other things that I have noticed, consumer confidence prior was 108. It's actually 103, so that's slipping. If you go to CNBC right now, they say that the market's down due to consumer confidence. I am no savant, and I am not going to say I'm more than what I'm not, but I am going to tell you I am a trader. And what I found in my trading is that this is serving up an opportunity for stocks to either run or to fall apart in October. If stocks can price themselves down now ahead of October, which is typically a profitable month in the market, if you go back and do your research, then you'll find that this creates a very good opportunity for stocks to make up 5-10%, probably even retest their highs that they had in July and August. But again, there needs to be a slight correction for them to pull back. If we go and we look at right now on the SPY, we have so far that the last 5 days have taken 3.79%. The last month has taken 4.93%. This was updated just as of right now. What that means is that if the stocks can give up another 1%, That'll be at about 5.93, or let's just say 6%. If they can do that, then you'll notice that this will be a very nice setup for October. So I'm just going to leave that there. New home sales, which come out, let me check this. I want to make sure I'm correct. New home sales came out at 10 o'clock today. The prior quote, or the prior report, was 739 new home sales. These are in the thousands, 739,000. The actual came in today at 675,000. So that is a trend to the downside. New home sales is something that has not been in the media at all. It is something that I think that if you can understand where the trade should be, let me get my keyboard out. When I am tracking new home sales or retail sales or housing starts or anything dealing with housing, I typically look at symbol XHB. That's going to be the Spider S&P Home Builders ETF. You may find other ones out there that work, but this one here has Toll Brothers in there, Home Depot, Williams Sonoma, the Pulte Group. It's got Owens Corning in there, which is also related with trends related to housing. And it also has the Lennox International Group in there. Other key home builders is KBH Homes, which is KB Home ordinary shares. The symbol is KBH. The name of the actual stock is KB Home. There's also the Pulte Group. And there is for home sales, the Pulte Group, let me give you that symbol. The Pulte Group is PHM. It's spelled PULTE space group. So these are some of the other home builders that I'll look at. There's one other one, but it is slipping my mind at this current time. Let me cover other things I've seen here. Crude oil inventories. Okay, so this is really interesting. The crude oil inventories have been showing that there's more use of crude, but there's also more reserves of crude. So that means that more people are using it, but there's also enough stockpiles at this current time to where we're not seeing very large moves in crude. Now, I did see a report for the NYMEX that crude is slated to increase, especially with OPEC saying that they are going to cut production starting in October 2023. And there are several reports out there that crude could go to $100 a barrel. So if that is the case, you're going to have companies like CVX, which is for Chevron. You're going to have companies like COP, which is ConocoPhillips. You'll also have companies like, SU, which is for Suncor Energy, Valero, VLO, as well as XOM for ExxonMobil. You're going to see these companies take off. Last year, energy was up 62% on the year. And if you go back and look at a chart for last year, you'll see that it was a very gradual climb. There were a few times, maybe 4, in which presented a very nice opportunity to either take some gains or to enter into the security. And so far for this year, we have crude, oil, all these oil stocks, all these energy stocks moving very, very slowly. Energy also for the year is currently down. Energy is at, let me go and pull a quote for energy. Let's see here. On a sector basis, energy is positive. It's positive 3.26% year to date. Energy so far for today is, let me check here. Energy for the day right now is up, it's down 0.75%. When we go to maybe CNBC or Market Edge, or wherever you get your commodities information from, should you choose to do that, we do have oil is at 90.51 dollars a barrel, which represents a change of 0.83%, which is up 0.93%. But crude is one of those trades that towards the end of the year usually takes off. Also, natural gas towards the end of the year usually takes off as well. When I go to look at a quote for natural gas, I'm going to be using, let's see here. We could either use BOIL, which is a ETF for natural gas. This is going to be an ultra, so it's going to be, let's go to its investment objective. It's going to be 2 times the performance of the Bloomberg Natural Gas Subsidy Index. So let's not use an ultra. Let's use instead a gas company. Let's use UNG. This isn't a gas company. This is also an ETF. You'll find in my book, as well as when I give these videos, I will typically quote trends using ETFs. I find ETFs are easier. I also find that they are more broader because they're not a concentrated natural gas company, and they do still represent the overall trend. So when I go to look at natural gas using UNG, I do show right now it looks like it is trading at $6.58. That's super cheap. Natural gas is one of those investments inside of your portfolio that may not necessarily operate as the market is operating. When we go to look at UNG, we show here that it started the year at around 1183. It's currently trading at 658, so that is a downtrend. UNG being a natural gas company, this is a United Natural Gas Fund LP, so it's not a company, it's a fund. But if you wanted to trade natural gas stocks in general, you have Cheniere Energy, Chesapeake Energy, EQT Corp, Kinder Morgan, as well as Southwestern Energy. So those are all nat gas companies. But I do still like UNG, just real talk. I like UNG because it is a security that if you look at it for 1 year, you're like, not going to touch it. If you look at it for a shorter duration, and you could do this during this video while I'm talking, or you could even pause this. If you look at it for a shorter duration, you can see that there are some days in which are clear buying points. Like I'm looking at a 1 month chart here. I'm showing on August the 25th, it was trading at 658. It rose all the way up to 718. There were 4 days in which you could have gotten out of that security. We have a drop to 654, which is on September the 6th. It rose all the way up to 710. You had 4 days to get out of it. We have a drop again on September the 21st, down to 662, so a little higher, and that's the kind of the range where it's at right now. It looks like this has the opportunity in the short term to maybe even go up to about $7 on the high end, maybe 712, 710. On the low end, it looks like keeping with that same holding pattern, 648, 658 would be around that range in which it would have received its lower prices. So these are just things that I've noticed. GDP, which is slated to have a revision here shortly to come out, and that revision for GDP is going to be this week, September the 28th. GDP right now is at 2.1%. The previous quarter, which was Q2, was 2.1%, and the quarter before that was 2%. So GDP is still staying in line. Maybe not a big surprise right there. PCE, the Fed's preferred measure of gauging inflation, including core PCE, which will strip out food and energy, as well as some other items, has been moving in line. It is down from the last time, which is probably why, or one of the contributing factors as to why the Fed did not move the rate the very last time they met, which was on September the 19th and the 20th of this year. What to watch for? A few things. The ISM numbers are going to be coming out October the 2nd and the 4th. The ISM is it's a reflection of the manufacturing in the US. ISM Manufacturing Index. I'm going to try to get a better quote than a guess. The ISM is this is according to the Institute for Supply Management, as well as for PMI, and sometimes it also gives it really well on Investopedia.com. But the ISM Manufacturing Index is an economic indicator that measures the growth of manufacturing in the United States. I'm reading this verbatim, that's right, from Google. The index is based on a survey of manufacturing supply executives. The survey asked participants to gauge activity in categories like new orders, inventories, as well as production. So this gives us a heads up that if the producers or if the managers are seeing higher costs on their end, then there's going to be higher consumer costs. You know, think about it. If you're going to make orange juice and you're using fresh oranges, if the oranges themselves are $3 higher and you have to sell orange juice to, let's say, your customers, or even if you were going to buy the oranges yourself, you'd be paying a higher price for them because the manager as well as the producer of oranges absorbed costs that made them higher. Does that make sense? Okay. The other thing to watch out for are the unemployment numbers are going to be coming out October the 6th. That's going to be less than 7 days away. The last rate for unemployment was 3.8%. When you go to pull a chart on unemployment, and unemployment has been rising, it stayed at 3.4 to 3.5% around the area for the longest time, and then it just took off. So that is something to be mindful of. If the unemployment numbers are negative, then you're going to see some competing friction on October the 6th. Why? Because JP Morgan and some of the other bank stocks, are slated to report their earnings around that same time. So JP Morgan, I show here, is going to be reporting their earnings on, one moment, I'm checking, October the 13th. Schwab is reporting on October the 16th. As well as USB is reporting on October the 18th. Goldman Sachs is reporting on October the 16th. And we're going to get one more to round it off, which is Bank of America, which is reporting on October the 17th. So there's going to be some friction around October 6th to October the 20th because a lot of these bank stocks are going to be reporting. Also, by the time we get to October the 28th, more than 35% of the companies in the S&P would have reported. So that does mean that if you're looking for volatility to work in your favor, maybe this is the best day for you to look at some of those trades, and you still have some time. It's only 2:27 p.m. But if you were looking to just kind of understand how the markets work and market mechanics, this is a good time. This is a very good time. Let's check in with the Dow. The Dow at this current time is down, one moment, the Dow at this current time is down 411 points. So we have created a new low on the day. If you were a person who did not want to do any of the things in this video, which is fine, you don't have to, ETFs and mutual funds make it very easy for you to have exposure to something so much more broader than just choosing one particular stock. If I had to choose one stock that would go the distance, I would probably spend time right now learning about how stocks move, as well as building my stock list. That's what I would do. And then every day I would paper trade to see just what's going on with these stocks. There are ETFs on the NASDAQ. There are ETFs on the S&P as well as on the Dow. There's even ETFs on the Russell index for stocks. We must remember the quotes of Warren Buffett, which he said a lot of things. One, his favorite holding period is buy and hold. Not my favorite holding period. The other thing that Warren Buffett says is that when others are greedy, you should be fearful, or when others are fearful, you should be greedy. And when others are greedy, you should be fearful. So it's a reverse of each other, but it does mean the same thing, which is right now the markets are panicking. They're looking for what to do. Where do we go? You could look out to the things that you have inside of your house, which is what I've mentioned in my book, as well as what trades you've been hearing, what trends you've been seeing. And you can make a list right now for stocks that you really, really, really want to have. And once you have that list, go find that symbol. If it's a trading symbol, if you can't find a trading symbol of that particular item that you buy or that you currently have a subscription to or that you pay into every month, find something similar, because what you're going to find is that birds of a feather flock together. You may have heard that. Or you'll find that there are many, many times in which something that is closely related has a positive correlation with what you're looking to trade. The other thing that I'm going to mention during this video is that let's check in one more time to see what the market is doing, and I'm going to get to that. The market is down 416 points, so we have established a newer low on the day. Let's see when the Fed next meeting is for 2023. I want to make sure you have this information. The Fed meeting is going to be October the 31st to November the 1st. It's usually a 2-day meeting. So that is also something to watch out for in the month of October. Again, historically, the month of October does create buying opportunities, or sometimes it does start the process related to the Santa Claus rally, which could resume, or not could resume, it could start, or it will pick up after the fact. But many of the financial companies, as well as a good portion of the S&P companies, are going to be reporting in October. This is a down day. This is a time in which you can establish your list. I know I'm being redundant here, but you can establish your list of things that you really, really want to trade and you want to have an entry point to. And then you don't have to buy a lot. You could buy like one share, you know? So like we use Netflix in our current household. Netflix right now is going at $377.91. Netflix right now for the month is currently down. For the year, however, Netflix is up. Netflix began the month at $441. It's currently at $377. So if you really, really love Netflix, you know, this is an opportunity in which maybe you could go into it, you know. Full admission, we don't have any Netflix in our portfolio. It's not in my portfolio, but it is something that I purchase into. If Netflix continues to drop a little lower, could I scoop some up? Maybe, you know. Sometimes in the market, even if you don't know a lot about what to do, ETFs do offer a very good entryway into investments, as well as just knowing what to trade. Also, what you buy should be what you invest in. So, you know, if you're a kid that loves Nike, Nikes are through your house, invest in Nike. If you're a person who really loves shopping at Albertson or Kroger or Walmart or Costco, that should be in your portfolio. I have heard several times people say, I can't buy something because it's too expensive. I can't invest because it's too expensive. Yet, when you think about it, Disney sent us a message the other day that said the subscription is going up to $13.99 a month. Okay, so we've had Disney for what, 3 years? When you go to look at the math, $13.99 times 12 is $167.88. Can you say that you cannot afford a stock that's $167 or 88, $167.88 or less? No, you can't say that because you're paying in subscriptions for the year. Also, our energy bills across the entire United States are so much higher right now. And energy bills are our average energy bills like maybe 150. 150 times, we're going to gross this up to 12 months, is $1,800. That's how much we pay for energy. And if you go to look at your cell phone bills, it's even worse, right? So between energy, electric, your cell phone bills, what you put on your back, what you put on your feet, there is a trade for you inside your household. I covered a lot of information. I know I did. But the market is down. Let's check one more time. The market currently is down 412 points. Again, the time to be fearful is when others are greedy. The time to be greedy is when others are fearful. The other thing is that take this time when the market is down to make a list of things you'd like to buy into. Create your strategy. What do you want to buy it at? What do you want to sell it at? Also, remember, markets can remain irrational longer than you can remain solvent. That's by John Maynard Keynes. He was an economist. So when you're thinking about what to do for the duration of this day, spend some time with what your interests are. Spend some time sorting out what is most important to you, and then trade accordingly. I'm on top of the world, baby.